Okay, hi guys. We're in for a treat today. We have a very, very special guest, and in my opinion, one of the greatest central bankers also in the Philippines. He's now retired, and he's also now pastoring his church, which we'll talk also about in a bit. But without much ado, I'd like you to meet and hear the insights of Mr. Diwa Guinigundo. Hello, thank you so much for joining us in the podcast.
Hi, thank you very much, Marvin, for having me here.
Okay, before I begin with the questions, how's everything? How are you in this entire pandemic as well? And
Well, I'm quite
retirement.
busy. I'm quite busy because one, I'm writing two columns per week, one
Mm,
for the Manila Bulletin and the other for Business World. And
wow.
we're also busy with the building of our sanctuary,
Mm,
and I do deliver the weekly message since the pandemic. So
wow.
I'm quite busy. Yeah.
And I guess you just ended one, but you just ended one part of your career, but others are opening as well. Now,
Well,
uh,
you can say it that way.
now here's my question. So a lot of the people watching the podcast are basically retail investors, and
Yeah.
I'd like to also drill in on how you would think, how one of the greatest minds would think in terms of how they handle their finances. Right now, we are in a pandemic that no one has predicted, even from last year. For your own personal finances, how are you? What are you doing? Are you saving up cash muna, or would you invest right now to take advantage of more cheaper opportunities?
Well, first of all, the pandemic has been described as a tail event. Okay. Or it's something that was not expected. It's a
Mm-hmm.
black swan. People
Mm-hmm.
are saying it's a black swan. Although, of course, if one were to look at some of the published in the press, it looks like um, Bill Gates warned about this. I think as early as
Mm-hmm.
2015.
Mm-hmm.
But of course, it is incumbent upon all governments to make sure that their health infrastructure and health facilities are always robust and resilient for any kind of pandemic.
Mm-hmm.
And what is also tragic is that this pandemic has brought about a freeze in economic activities. And as a result, business activities have been, well, also frozen.
Mm-hmm.
And as a consequence, it has also affected the way we look at things and the way we invest. Now, in my case, I'm quite heavy on real estate, no?
Mm-hmm.
Both in terms of raw land and condominium.
Mm-hmm.
As you know, I'm retired. I have well, somewhat, it's quite paradoxical in the sense that I'm retired, I'm past 65, so I should have a shorter time, short horizon.
Mm-hmm.
But I can go long in terms
Mm-hmm.
of real estate, no?
Mm-hmm.
And this is something that can hold its value even during this time of a crisis. But in terms of my portfolio investment, I would rather hold more in terms of fixed investment,
Mm-hmm.
basically government securities as well as corporate papers. Of course, people would always have to be very, very circumspect, very careful in terms of selecting corporate papers, for example. And then one should also be aware that interest rates are not getting higher, but they are coming down. They are following the lead of BSP, which has
Mm-hmm.
brought down the policy rate
Mm-hmm.
to just about 2.25 percent.
Mm-hmm.
Now, of course, in the case of government papers, we can also expose ourselves to dollar-denominated government bonds.
Mm-hmm.
That's something that one can also consider, but I would advise people to be very careful about them. Now, some people are also saying, since the equities market is also weak, one can also be very opportunistic about this. But again, I would caution people. I think we need to be very while we're supposed to be opportunistic. I think we should also be very careful, especially in terms of the magnitude of our exposure. We should limit ourselves to those stocks or equities that we can explain the
Mm.
fundamentals. Okay, if there are growth prospects, by all means, we can take advantage of the situation. Now, of course, we need to be liquid. So, in terms of liquidity, we can keep our money in bank deposits, those that can always be withdrawn and deployed in any of those possible investment outlets. Now, I'm not also averse to some business propositions that could transcend health protocols or health
Mm.
issues. Something that can also leverage on the situation today, like IT-related new business models that can leverage on digital platforms. I think this is something that one should consider. Look, some people were saying we should invest in franchised business activities, but today you have to think twice.
Mm. Mm.
Because of the social
Mm.
distancing protocols, I think we
Mm.
need to be very careful about those things.
I'm just curious. You mentioned that you're retired already. If you were say 35 years old, because majority of the people watching this are between 25 to 45, if you would advise your 35-year-old self in this condition, would you be more conservative right now or would you be more aggressive?
I think I can be more aggressive. Time is on your side.
Mm.
Time is on your side. You can go long because after all, we are driven by business cycles,
Hmm.
and most of the time, it goes back to where it started. So one can always wait it out.
Mm-hmm. Mm-hmm.
That's one. Two, I think it is also important that we should rely less on intuition and rely more on actual assessment of the markets.
Mm.
Two, the growth prospects or in the macroeconomy,
Mm.
and then look at the downsides and the upsides
Mm.
risks.
Mm.
I think when one goes through this particular process of assessing business propositions, I think they can go and invest their money. Time is on their side. It's no
Mm.
different from insurance.
Mm.
If you get your insurance early on,
Mm.
you don't have to pay as much.
Mm.
Rather than if you get one insurance cover at the age of 50 or at the age of 55.
Well said, well said. Follow-up question on that. Ako, I'm a big fan of the Philippines consumption-driven economy, and the way I
Yeah,
invested also was following where the economy was. Now, because of this lockdown, because of this pandemic, consumption has been hit. Do you think we
yeah.
will recover from this? And the whole social distancing aspect of all of this as well?
Marvin, in some of my previous presentations, I have always emphasized that the Philippines has what it takes to grow and in these pandemic times to be able to recover. Okay, for a number of reasons. One, we have a long history of growth, resiliency, and robustness. We have 21 years of uninterrupted economic growth. Okay, and that's a big feat. I don't think many countries could also claim that kind of economic record. In short, in the last 20 years, we have done our homework. Okay,
Mm.
policy and structural reforms.
Mm.
We have improved our productive capacity. Demographics is on our side. We have also proper macroeconomic policy, both fiscal and monetary, that continue to support growth. And against this pandemic, and also to promote economic recovery, we have this the government's four-pillar strategy for economic bounce back. So I think in terms of whether we can bounce back, we can recover, and continue with our 21 years or 84 quarters of 84 quarters of economic growth, I think we can do it. But the
Mm.
problem is, I think there are also a number of handicaps,
Mm.
which in my one of my columns, no, I think it's in the business world. I emphasize that we are facing four handicaps. The first handicap, of course, is our public health management program. We were quite late in the game in terms of declaring travel restriction. We did not take it quite seriously. So I think we need to improve further on the three T's, no? Testing, tracing, and treating. I think that's what is important.
Mm.
If we are able to provide some proof that the incidence of infection, instead of rising, starts flattening,
Mm.
and that the number of recoveries also starts going up,
Mm.
and the number of deaths is minimized the way they do it in Vietnam, and in other Southeast Asian countries like Korea, for example, and Singapore, I think we would be able to lay down a very, very important foundation of again, consumption-driven economic recovery.
Mm.
Because if there is uncertainty, especially in these pandemic times, people do not want to go out
Mm.
and eat out and
Mm.
spend. I
Mm.
mean, I've been to some of these malls in the last 2 weeks,
Mm.
and I'm quite sad, no,
Mm.
seeing malls almost empty, even outlets, or even those shops selling clothes, both men and women, etc., now offering 50, 70%. They're almost empty.
Mm.
Eating places, again, are also empty. Almost nobody is there.
Mm.
Now, why? Because people are afraid that if they go out, they eat out, they
Mm.
spend money,
Mm.
they might catch the virus.
Mm.
So to the extent that we can successfully defeat this problem in health, I think we should be able to see a more robust economic activity in the Philippines. That's one. Second, I think it is important that the execution of these policies should be level. It should be even. Okay, we know some of these issues, and if you have an equal application of the law, people do not get confident about public policies. And if public policies do not enjoy public support, there is very little public ownership, chances are confidence in public policies will also be equally weak. And therefore, the effectiveness of public policy in, let's say, engineering an economic program for economic recovery will have a less chance of succeeding. So I think confidence is the name of the game.
Mm.
But I think what we said earlier, I think remains true.
Mm.
We have what it takes to grow. All that we need to do is good governance, uh, very good execution and implementation of public policy, especially on health, and then you will have all the ingredients for a strong recovery of the economy.
and and I think what's so interesting there is it will also take time before all of this, when people feel comfortable already going out. I think that's when we see things get better as well in terms of spending and going out and
That's
tourism.
right. In fact, if you look at OFW remittances, they're down.
Mm.
Okay, uh, foreign and portfolio investments are also down. I
Mm.
think these are signs that we really need to boost morale as
Mm.
well
Mm.
as confidence
Mm.
in the prospects of the economy.
Mm.
And one way of doing that is to make sure that leadership is felt in the markets and in the marketplace. Also, public health management should result
Mm,
in the flattening of this epidemiological curve, and that is very, very important.
mm. and and this is my favorite part of this podcast now. Uh, I'm sure you're one of the best people who can answer this. We've seen interest rates drop from 4.75% almost a year ago to 2.25% as of the time of this recording. This is one of the lowest interest rates that we've seen in a very, very long time.
Mm.
Do you think it's gonna go even lower given that there's still uncertainty in where we're headed?
I think we have good economists in BSP who should realize that at this time, real interest rates is already negative,
Mm,
right? The BSP brought down the policy rate to 2.25%. June inflation rate was 2.5%. So
mm,
that's already negative.
mm,
January, June average was also 2.5. Therefore, in real terms, the policy rate is already negative.
mm,
It is also negative in real terms relative to the forecasts of the central bank for 2020 and 2020 and 2021. The forecast for 2020 is 2.3 and 2.6, I think, in 2021. Therefore, at 225, you have a negative real policy rate.
mm,
Now, what's wrong with a negative real policy rate? Now, if your nominal interest rates have gone too low because policy rates are already in negative in real terms, you will have problems in terms of repricing of pricing of risks. Two, you will also have problems with issues about liquidity.
mm,
Okay, if there is excess liquidity, you might also be going into a possible asset inflation
mm,
or asset bubble, and therefore issues about financial stability may also be raised. So there are risks there.
mm,
And thirdly, once you have some semblance of recovery in domestic demand, that could also be inflationary.
mm,
Now, finally, if your interest rates are just too low and negative in real terms, you will be penalizing savers and investors,
mm,
even in corporate papers or
mm,
in government securities or government bonds.
mm,
You're penalizing them. But of course, the banks are happy because the BSP has released a lot of liquidity from the reserve requirement. It has brought down the policy rates. Now, what we're hoping is
mm,
that the banks would also be able to, bring it down to the level of their borrowers.
mm,
Lending rates continue to be relatively high,
mm,
so I think the banks can also be helpful in
mhm,
terms of providing additional support to credit and liquidity conditions, so they can also bring down their lending rates. That
mm,
could further increase the demand for credit. Now, this is something I think that we need to understand when we talk about monetary policy moving forward. Now, of course, when you argue that the economy remains weak, you need to accommodate with a more accommodative monetary policy. Then it's possible that you hit an even more negative interest rates in real terms. I think there's got to be some limit
mm,
to it.
mm. Got it. In line with that, no, I'm just so curious because
Yeah.
Japan, US, Europe, their interest rates have fallen either below and close to zero, or their interest rates are negative. What's your take on that, and what do you think is the negative side of that also if we go through that and then follow up on that US quantitative easing? Will we ever do that in the Philippines?
Well, in the first place, I think the BSP has time and again assured the markets that we have not run out of conventional monetary policy. Uh, you still have a lot of tools out there. One is, of course, reserve requirement. But reserve requirement, of course, will further infuse the market with more liquidity when we already have a lot of liquidity in the market. Number two, you can do a lot of tweaking, let's say, the discounting rates. The banks can turn around and borrow from the central bank. Now, that is another conventional tool of monetary policy. The other, of course, is we have a lot of macroprudential policies that can help the banks. For example, in terms of crediting their lending to MSMEs or to small business as compliance with the reserve requirement policy of the central bank. Carry over of losses, deferred tax payments. I think all of these are instruments of conventional monetary, of course, and tax policy. So this is something I think that is open to government, both our finance people and the monetary authorities, instead of considering non-conventional or quantitative easing type of monetary policy. After all, some people are saying, well, the central bank has already provided 300 billion pesos worth of debt monetization to the national government. Yes, but this is not, to me, this is not QE. This is not quantitative easing. This is not non-conventional or unorthodox monetary policy, because the BSP charter is quite clear. There are limits to such provisional advances by the central bank to the national government.
I have a question on that though. You mentioned about decreasing reserve requirement ratios, or also we've dropped interest rates. And there were a lot of people who were asking this question that what if interest rates are so low pero yung mga negosyante because of the uncertainty, takot rin sila humiram, or people will be scared to buy cars or houses to borrow money for it because they're scared baka hindi rin nila mabayaran because of all of the things that are happening right now. Is that
a very good point? No, that's a very good point. Again, in one of my columns in the Manila Bulletin, some people are saying, when monetary policy is being used in a situation where monetary policy will not matter, it's like pushing on a string. In a situation where there's a lot of uncertainties, where there are risks to business activities, the way we have them now, a further expansion of monetary policy, further release of liquidity may not at all be effective, precisely because of that dimension of uncertainty in the market. That's why earlier on I was saying it's a question of boosting confidence in the market. If everyone knows that wala pa tayong vaccine, wala pa tayong gamot laban doon sa pandemic na yan, sa virus. So people are still uncertain. They are afraid to go out, spend, and eat out. So the point is, if this is done and and public health management becomes stronger, and we are able to show the flattening of that curve, and that you have zero death, infection is down, recoveries are up, then people will be more confident about the prospects of economic activities. And that's when monetary policy and fiscal policy really become more effective, because people are no longer reticent or reluctant to spend and eat out and invest. I think this is the bottom line of all of this.
Super agree with that. I believe that we have one of the best banking systems, and our banks are very, very well equipped based on what's happening. But a lot of people have been asking, should defaults be a concern? A lot of the banks already have placed loan loss provisions as part of their disclosures to somehow put a buffer in it. But my question is that enough? As a person who's invested in banking stocks, or a person who has mutual funds that has exposure to banking stocks, should there be a cause of alarm given that they're already expecting larger defaults coming this year?
No, it is natural and it is something that is called for under the situation, Marvin.
Mm.
It is part of risk management. If the situation is so precarious as this one, it is incumbent upon the banks to put up higher loan loss provisioning. Tama yun. I think wasto yung ginawang yun ng mga bangko dito sa Pilipinas.
Mm-hmm.
For whatever it is worth, I think it is important that they are prepared to do it. Malakas man ang ang finances ng or financials ng mga bangko o ng kanilang mga corporates. If this lockdown continues and if you have an atmosphere of fear and uncertainty, okay, no matter how strong your business is, no matter how strong the banks are, chances are there will be some difficulty amortizing their debts. So it's important that you put up those loan loss provisioning. But I think it is also important to realize that the Philippine banks continue to be strong in the sense that, one, their capital base remains above the international norms of 8%, and the BSP's regulatory capital of 10%. They have also put up their liquidity coverage ratio. They have also considered the net stable funding ratio in their management of their books. So I think the banks have been, because of the cleaning up that we did in the last 10 years or so, the banks are basically resilient and robust. In fact, there were upgrades by the credit rating agencies of many of our big banks. And we should be encouraged by that. But there are, of course, again, some challenges. No, if you have this kind of extended uncertainty and lockdowns in terms of economic activities, there will be difficult times ahead, and therefore the banks should, and they did, provide higher loan loss provisioning.
Do you think we will ever come to a point that there will be massive defaults, or it's something that will still be manageable based on we will recover faster so that later on we will not have larger defaults similar to what happened? I know it was a different crisis in the 90s, but will we ever hit those levels?
It will depend on how our health authorities are able to flatten the curve. Okay? Everything depends on that, to me.
Got it.
I think our economic managers have done a good job in putting together an economic recovery program. But again, this is all dependent on how we are able to manage this viral pandemic. I'll tell you why. One, meron ka man na four-pillar strategy. Okay? If this lockdown continues because of our failure to arrest this health problem, then the national government will have to extend providing conditional cash transfer or cash transfer, wage support, support to small businesses. And that costs money. Now, because of the lockdown, taxes are not forthcoming. Because business is down, business is weak, or it's down. So wala kang pagkukuhanan ng taxes mo. But under the Constitution, you cannot have a supplemental budget using borrowings. You have to have savings or additional sources of revenues. So we will be in a bind when this thing continues to extend. The government will have some challenges raising the funding for the economic stimulus, which is now more than 1.5 trillion pesos, or between 8 to 9% of GDP. So that's one big problem. But assuming, for the sake of argument, that we're able to do this, let's say by the end of July or August, then the likelihood of the economic recovery becomes bigger. Okay, there is a better chance for the Philippine economy to bounce back and to to consolidate its gains, its initial gains against the pandemic. But this is all on the basis of the government being able to overcome this health challenge. So lahat siya na doon sa health challenge.
You mentioned something about the stimulus. Should we drag on to somehow next year? Will this still be sustainable, or will we be in bigger trouble if the lockdowns continue to extend up until next year?
Well, I hope it doesn't it doesn't extend to next year. Otherwise, we will really be in trouble. Okay. What I'm expecting is that I think our health authorities are trying very hard to improve on those three T's, no? Treatment, no, testing, and then tracing and treating. In terms of testing, I think our capacity has improved to several thousands every day. In terms of tracing, I think they have now systematized the gathering of information from tourist arrivals, no, from in the airports. I think they should still leverage on the distribution of cash. When they distribute their cash to 18 million families, I think they should use that for tracing and and also for testing. No? And then three is treatment. Well, thanks to the private sector has also donated equipment, medicine, and even provided additional wings to some hospitals, and particularly public hospitals, to accommodate an overwhelmed health sector here in the Philippines. So I think it is important that we really address the health issue.
So everything will really boil down to this the I everything will boil down to the health issue being addressed before we go back to normal.
Yeah, of course, if you remember, Marvin, no? 1 or 2 months after the initial lockdown on March 15, people are already talking about let's open up the economy, let's open up business, etc., etc. But I believe then, and I still believe now, that unless we put more resources to addressing this health issue, sayang lang yung mga gagawin natin sa opening up. Look at what happened to Sweden. Look at what happened to even China and some other parts of Asia and elsewhere. Okay? They locked down for a number of months, 1 month, 2 months, and then later on they open up, only to find out that there was another outbreak. There was the resurgence of the virus. So they locked down again. Now, we don't want that to happen to the Philippines. We should make sure that we are able to flatten the curve. So unless that is achieved, I think we have to be very careful in opening up the economy. I'm not saying that we should not open up the economy. We should open up the economy with the full recognition that the virus is still out there. It is still infectious. It is something that we need to be careful about. So it can happen both. In parallel. No, while we're trying to open up in the economy, we must intensify on the healthcare, testing, tracing, and treating. And of course, once the vaccine is available, and some people are saying there are already some solutions in the horizon against this pandemic. So we should do it in parallel and with so much care.
Thank you for that. For someone who has been in the markets, financial markets, for a very long time, and you've experienced different economic cycles already, what's your advice for people who are going through this for the first time? Either a lot of people who lost their jobs, a lot of businesses that got hit. After seeing things recover also, what can you advise Filipinos in this era?
You are dating me, Marvin.
No naman. If you did not
Anyway,
see,
well, we have seen the second oil crisis of 1979,
whoa.
and then the debt crisis in 1982 to 84. We also saw the restructuring of our sovereign debt, and through the Brady exchange program, and then of course the 1997-98 Asian financial crisis, and the 2007, 2008, 2009 global financial crisis, and this crisis. Well, it is going to be a very impossible situation, Marvin, because if you lost your business, you lost your job, everything, what is left of you is probably goodwill. Okay? Your goodwill, your reputation. But your comfort is that you did not lose because of bad management. You did not lose because of of hanky-panky in conducting your business. You conducted your business, everything about your business above ground. But because of the pandemic, you lost your shirt. So you still have your goodwill. Now, it might be too risky to think of restarting a business that is similar to your previous business. I mean, given what is going on, as I was saying earlier, I think we should be open to looking at different business propositions. Those business propositions that could promise a new business model that can thrive in an economic lockdown, in a situation where physical contact is minimized. So IT-related businesses, I think, is a very good one. Those focused on developing new apps. You can be a billionaire doing those apps, something that will facilitate your business, and you can sell that to the markets. I think that is something that you can think about or consider for those who lost their shirt doing the old type of business. Now, where do you get your finances? Well, I'm sure people who are long in terms of their assets. So manghiram ka muna doon sa mga kaibigan mo o kaya doon sa mga kamag-anak mo na hindi umaasa doon sa negosyo that is very, very bad during this type of economic circumstance. Of course, if you were able to borrow clean from some of the banks and you still retain your relationships with some of these big reputable banks, why not? They have too much money. Interest rates are low. So this is the best time to borrow clean from your friendly banks. And then start all over again. In terms of your portfolio investment, I think related how I do my own portfolio investment, especially at this time.
Galing. The first time I met you was 2012. You were speaking, and you were very, very inspiring on the way you would approach things and the way you would see things. I would like just to end this video with this question, or at least with a statement from you that a lot of people right now are also depressed, they're anxious, they're scared, they don't know also what to do. Some of them maybe their finances were hit, or their OFWs that have returned home. Any words of encouragement naman for them, especially for those who are at a point where they don't know what's happening in their lives and in their finances as well?
Well, if you are down, there's nothing or there's no other direction but up. Okay, that's one. Two, it is important that you find challenges as an opportunity to make better decisions, consider better options, and pursue those options. Somebody said that if there is no door of opportunity available to you, why not create your own door? Okay? And then open it yourself. Okay? And then, of course, I always believe in the power of prayer. Okay? There's nothing that cannot be accomplished if we pray.
Mm.
Um, Anything is possible.
Mm.
Okay, anything is possible. Things that are impossible with men
Mm.
are always possible with God. He is the God of all flesh. Nothing is impossible with Him.
Mm.
That's the reason why the, the Philippines decided in the 1987 Philippine Constitution to show and to say that we implore the aid of the Almighty God. That is in the preamble of the Constitution. And even in terms of the 6 denominations of our currencies, we put there, pinagpala ang bayan, ang Diyos ay ang Panginoon. Blessed is the nation whose God is the Lord.
Mm.
Now, if we if we dedicate anything or everything that we do to our Lord, our God, I think there's no way by which we can fail.
Mm.
Okay, do your job, do it with greatest amount of diligence, and then pray. I think that is something that you can, with which you can look forward to a brighter and better future
Mm.
ahead of you.
Thank you so much for that. How can people see your columns? What day, what publication, and then also your online streaming for your sermons as well?
Yeah, well, Manila Bulletin comes out every Thursday, and then Business World every Friday.
Mm-hmm.
We put up our messages during Sundays in the POSIM, Fullness of Christ International Ministries website. We do it at 9 o'clock in the morning. Okay, so now that we are in the pandemic, in a pandemic environment, our focus is basically on that, on how leadership can attain success during these pandemic times. So it's something that I think we need to think about.
Mm. Thank you so much for your time, Mr. Diwa Guinigundo. Thank you. And I hope you guys got a lot from all of this. And what we're doing here is we're giving you data information so that when you handle your money, also when you invest or whatever you do with it, you're not basing it on emotion, but you're basing it on the numbers, on logic. Because what beats uncertainty is you knowing what you're getting into as well. So thank you so much. And to everyone watching, feel free to put in your questions in the comment section. We can make more videos on top of that as well. So thank you. And I hope this video helps you trade well, trade strong, trade smart. See you all again soon. And God bless you all. Thank you, Mr. Diwa Guinigundo.
Thanks, Marvin. God bless you.